On the back foot of PSU banks, we spoke about how Central Bank, Bank of Baroda have exposure to go first, but the rest of the pack too is slumping a bit, and Adani Group stocks too are under pressure. Adani Wilmar, by the way, reported their numbers, margins of decline, profits under pressure, and that stock too is down 4.5%. But of course, there are a lot of individual mid-caps which have reported numbers like Godrej Properties, MRF, Havells, and we'll talk more about it in the next 1 hour. Surabhi, hi.
Hi, afternoon. I was actually looking at the dollar, which is had a sizable decline today. You should pull up the dollar index because there's about a 0.4% drop on it, just above the 101 level. And yields have been on the back foot as well, 3.4 on the US 10-year. That's decline on the dollar index. So basically approaching this big event with a fair amount of caution, you can say. That's international markets. Europe, having said that, Europe is doing a lot better. European indices, the benchmarks are up between 0.25% to 0.5%, some even more. And for the time being, even futures, Wall Street futures are not too bad. Nasdaq is up in the green, so is the Dow, minor green on Wall Street futures as well. But in general, some sense of nervousness because you also get the private sector jobs data today, the ADP report, and that data is expected to be on the softer side. So whether the Fed really flows through with that 25 basis points rate hike or not, that's something that we need to watch for. But Prashant's point is, of course, very well taken. And Nigel, I think that is the differentiator because this huge flurry that we had in the mid-cap market, even in the earlier part of the day, yesterday for sure, even earlier this morning, that has quietened down to an extent. What are you making of things?
Well, that's right. The PCR that was moving to around 1.2 odd, that's cooled off a little bit to around 0.93. Now, that's telling you the puts that were written. There is some unwinding that we're seeing, and that's not really been the trend for the last many sessions when when the markets are going only one way. That was northward. So there is unwinding being seen at the 18,150 put, even the 18,200 put. So there is some nervousness that's creeping in out there. And after a while, we're seeing call writers, well, they're coming back in style. 18,100 call, the premium at the start of today was around 90 rupees. So those call writers, they're making some money because the premium has come down to around 40 rupees. The other one is the 18,200 call. Out there as well, the premium was around 35, 40 rupees. That's come down to around 11 rupees approximately. So there is call writing that we're seeing. The data point suggests that the bears, they are positioned in such a manner that 18,250 gets, defended. Let's see whether or not we can get past that. But as of now, I think the odds are stacked against that level really getting broken out. So let's see how this goes. But there is some bit of skittishness that's creeping in after a good rally that we've seen.
Okay, let's tell our viewers what we've lined up in closing bell then. It's a packed show. Go first, CEO. Tell CNBC-TV18 the NCLT filing is aimed at protecting assets and finding a resolution. At the core, there is no supply of engines by Pratt & Whitney and claims of $950 million. Even as the promoters continue to remain committed, lenders are protected by the land provided as collateral. Key excerpts from our conversation with the CEO comes up on the show.
From the mid-cap space, Havells and MRF reacting to quarterly earnings. All the key highlights from those numbers coming up.
Keeping it with earnings, we'll also get you key expectations from HDFC and Dabur.
Jitendra Gohil of Credit Suisse Wealth Management will be joining in. He's our alpha manager on the show today, and we'll get some more insights into how CS is reading the market picture.
Okay, well, how should you position yourself in the last hour of trade? Mitesh Thakkar joins in with some insights and some ideas. Mitesh, good to have you with us here. Thank you very much. Hands-off approach or do something? And if do something, then what?
Good afternoon, Prashant. Not yet. I think, I was talking about the fact that the hourly indicators are overbought and we might see a couple of days of choppiness. I think I will use that volatility to possibly buy at lower levels. The directional bias remains on the upside, but tactically, I think, we have had a good rally. The moving averages are slightly lagging behind and the markets are now showing signs of being mildly overbought. So, in fact, closer to 18,250, I would still be, in mode of taking profits on stock positions as well. But if you get closer to about 18,000 levels, that's my area to, find and look for a long trade. So for the timing on the index, keeping quiet, but trading with stock specific biases, more of long ideas. Though I think, as I said, closer to 18,250, we'll at least take partial profits on stocks as well. For the timing, Maruti and Deepak Nitrate are on the buy list. Maruti, in fact, has been doing very well for the last couple of days. Seems to be signaling some kind of a medium-term trend. That's a buy with a stop at 87.50. I was closer to about 89.60. And Deepak Nitrate also, I think the chart was slightly subdued, but today I think it's given a good price and volume breakout. So here it's a buy with a stop at 1925 for targets of 2000.
All right, Mitesh, thank you very much for that. Those are individual trades which Mitesh would like you to take. Now, CNBC TV18 Newsbreak confirmed, we reported this in the morning, and now Enforcement Directorate is carrying out searches at the premises linked to Manappuram Finance. Stock saw a large tumble. It opened lower by, I think, about 2%. At one point, it was down 14%. It's recovered a little bit since. We've also had a comment from the company itself. But what's the matter about? Yash is standing by with some details. Yash.
Well, Prashant, very minor recovery to say as far as the stock of Manappuram Finance is concerned, still down about 12% and that has been happening since the news of Enforcement Directorate conducting searches at properties linked to Manappuram Finance really surfaced early in the day. As far as these searches are concerned, we've been given to understand that these have been taking place in the Thrissur area of Kerala. Multiple locations, offices of Manappuram Finance are being searched by the Enforcement Directorate, not just the offices, but the premises of the Vice President VP Nandakumar also being searched by Enforcement Directorate. As far as the allocation here is concerned, what we've been given to understand from our sources is that Manappuram Finance, which is a non-deposit NBFC, took deposits in excess of 100 crore rupees. Also, there have been various transactions without proper KYC records, and in relation to all those charges, these searches have been carried out by the Enforcement Directorate. Just about 10 minutes back, the company did provide a statement on these searches. Manappuram Finance has said that the Enforcement Directorate is conducting searches at its registered office and the company is cooperating with the agency, providing all the needed information.
Okay, all right, got that. Yash, thanks for the details there. Yep, that's quite some damage on the stock price for obvious reasons. Prakash Diwan is joining us on Closing Bell today. Prakash, good to have you on as always. Any thoughts on Manappuram? I mean, obviously, there's absolutely no scope for any confusion around these matters in the market. It's quite evident in the way the stock's reacting. But how do you rank and rate the business otherwise? What would your advice be to anybody who perhaps holds the stock now?
Good afternoon, Survi. So, the timing couldn't have been more unfortunate. And why I say so is, the competitive landscape has changed so dramatically and unfavorably for most of these old NBFCs. Because the way the banks, particularly some of them are so laser focused onto, gold loans as a portfolio to grow. And case in point is CSB and, some of the other regional banks out there in the south. And not just the south, they're the ones that are also kind of, going northwards of the southern peninsula. I've also started seeing so much of this. In fact, you'll be surprised at the way SBI gold loans have grown in the last 2 years. So I think very clearly these companies had to walk the tightrope. These matters never help. But from a fundamental perspective, there's always stress. The cost of funds going up, the spreads coming, kind of, getting into some sort of pressure. And the propensity to be able to manage gold inventories in an environment where gold tends to get, very, it makes you feel very lax about gold prices always going up. That's something which can really be very high risk. So I think it's difficult times for somebody who's already invested. If you're still above water, you would probably pare your exposure, but don't look at fresh exposure for sure at this point.
Okay, don't look at fresh exposure. That's the call coming from Prakash. Prakash, I wanted to ask you about Sapphire. Any view on the stock? I think a couple of brokerages had initiated coverage with a positive view. And as we know, Sapphire trades at a bit of a discount in comparison to Devyani. Your view out there?
Yeah, I mean, these are businesses which have still not matured. I mean, stocks, scripts which have not yet matured on the market. So what happens is that you tend to kind of go down to the underlying business and start figuring out in terms of, whether there is anything which is veritably changing for the stocks to start reflecting. But I haven't seen anything which kind of tells you that this is superior to the other. I mean, if you look at what Jubilant Foods is still doing and marching ahead with, or for that matter, even Westlife, I think they're way ahead. The only advantage, Nigel, I should point out, is that
Okay, all right. I think Prakash is having some audio issues out there, so we'll get back to Prakash in just a bit. But a quick check on the markets. Well, a couple of stocks are making a good comeback, namely Adani Enterprises as well as Adani Ports. Both of them from the day's low. They've recovered, they've cutting their losses. And Tata Consumer as well has moved up a little bit. But the big stock today was Tata Steel. In a run-up to its numbers, well, the stock rallied yesterday. It was up 2.5%. They report actually a good set of numbers in the fourth quarter with a beat across parameters. I had a conversation with Tata Steel's MD and CEO, Mr. Narendran. He spoke to us on the coking coal cost, as well as he clarified on their interest on NMDC Steel. Let's hear him out.
So I'm not remembering the exact numbers of coal consumption cost, but this quarter will be about $10 higher than last quarter, consumption-wise. So the procurement may be about $25 to $30 lower in this quarter, but we will get the benefit of that only in the next quarter. Quarter on quarter, we expect prices this quarter to be about 1,200 rupees higher than last quarter. Okay, so that's our assessment. As far as India is concerned, spot EBITDAs just now are, I would say, slightly lower than what we've announced for a simple reason. This quarter, we've had a lot of shutdowns. We will have a lot of shutdowns. April, June is when we take a lot of our shutdowns. So if you look at it from a cost point of view, the cost per ton tends to go up because you have lower volumes. The fixed cost gets apportioned over lower volumes. No, we haven't. For NMDC, we haven't. Nilachal was different because we've always said that we were interested in long product asset. And Nilachal was a long product asset. It had 2,500 acres of land next to our existing site. It had 150 million tons of iron ore. So we didn't value it as a 1 million ton steel plant. We valued it for its entirety.
Okay, that's Tata Steel for you right now. Prakash, any thoughts on the stock from here? Okay, I don't think Prakash can hear us. We'll try and fix that line and come back. Let's take a break and come back with Prakash. He should be ready with us. The market, by the way, is down 60 points, so it's maybe seen a little bit of recovery, but it's in that very tight range, down 80, 90, and then some recovery, and then back down again. We'll take a break, the first in the show. Prakash with us, and we'll also have Jitendra Goyal of Credit Suisse Wealth Management joining us a little later on the program.
Well, don't let the softish nature of the mid-cap index fool you. There is a massive, massive mega PSU rally underway. A lot of it doesn't seem to sort of, conform to any immediate sense or logic. But look at the moves. EIL, Engineers India, is up 17%. The volumes are pretty huge on a lot of these stocks. RVNL, absolutely gravity-defying moves. They continue 10% up. BHEL, you can argue with that, yes, there's been a lot of fundamental news flow. You heard the company on the channel yesterday, and they're sounding extremely optimistic. And there's NLC, erstwhile Navali Lignite Corporation, IRFC, Shipping Corporation of India, NHPC, SJVN. It's cutting across lines. Anything that has a Government of India tag is simply shooting through the roof this afternoon. Prakash, I just wanted to run this past you. What do you make of this trend? I mean, I don't know if this is just some funny trading going on. Yes, we all know about the railway opportunity. There's no denying that. But the manner in which these stocks have started moving, RVNL, IRFC, does it at all make you uncomfortable? What do you make of the moves?
No, good afternoon, Subi. Not at all. I think, the government is the biggest, it's got the biggest checkbook in town today. And what's happening is this government has very clearly set itself to achieving a lot of targets before 2024 for obvious reasons. And there's no delay or lag in terms of, starting to spend on those projects that they've announced. I mean, usually you see that the first half is tepid. April, May, nobody talks about new spending. But here, it just seems seamless. March is gone, April has started, but the projects keep on getting announced. I mean, the number of trains that they're talking about, the number of, new capacities that they're talking about on the defense side. I think everywhere there is a very clear momentum that the government is pushed for, and that's likely to pump prime, in terms of, capex going percolating to the private sector as well. So I think it's a very calibrated move, if you ask me. And most of these players which sit on huge capabilities and not just capacities like BHEL, RVNL, Realty, they will definitely start getting re-rated. So, and what happened to the Gujarat government owned PSUs just about a week back, we were talking about, this whole policy announcement and clarity in terms of how to share the wealth with minority shareholders as well as the government itself. I think it's going to become the norm. So most PSUs will be able to reward shareholders much more amply and clearly, and that's probably likely to happen sooner than later, should be. So that's very clearly a reset that's underway.
I don't know how many of you all remember, but RVNL's issue price was 19 rupees when it listed in April or May of 2019, so just about 4 years back. And since then, look at the kind of return that we've got in RVNL. And yesterday, of course, it's got that Maharatna, Navratna status as well from the Government of India. Let's move on and talk about Havells. That's reported their Q4 numbers. Surbhi is here with the fine print. Surbhi.
Thanks so much for that. So Havells have reported a good set of numbers. The numbers are slightly better than the CNBC-TV18 poll. The revenue is up by 9.8% versus the CNBC-TV18 poll of 8%. The EBITDA is higher by 1.4%. There is slight compression in the margin. Margins have come in at 10.8% versus 11.8% at the same time last year. And the net profit is largely in line with the poll, came in at 358 crores. Now, most of the revenue growth is driven by the switchgear segment and the Lloyd segment. In the switchgear segment, the revenue is up 27%, and in the Lloyd segment, the revenue is up 32% on a year-on-year basis, and they have managed to maintain the losses at close to 23 crores. Now, what we have to watch out over here is the market share gain that they have gained in Lloyd, and also any commentary on the demand environment and the pricing pressures considering the unseasonal rain. The only negative in the Havells results is the electrical segment, where the revenue is down 14% and the margins have come in at 15.4% versus 19.7%. There was some weakness expected in the electrical segment due to the change in the BE norms, but I think 14% was not expected. But overall, a good set of numbers by Havells.
All right, good set of numbers. So we got that. Just one more comment that I'm reading from their presentation. They're saying that the consumer demand remains a little bit sluggish. So we'll have to wait by further clarity on that. But I guess that's one of the reasons why the stock is not flying away. But one stock that's reacting very, very positively is MRF. The Q4 numbers look good. Sonia joins us to fill us in with a quick analysis. Sonia?
Well, thanks a lot for that. So it's a complete margin game here because of lower commodity prices and better operating leverage. MRF's margins are fabulous in this quarter. In fact, much above what the street was estimating as well. It's a 450 basis points year-on-year jump up in margins at 14.5%. It's a multi-year high that MRF has seen. On the top line, it's not too bad. Just a 10% growth is what they've seen. But a pickup in demand is what we've noticed across the board, along with lower commodity prices, is something that has aided their overall numbers. The profits have more than doubled this time around. Now, it's important to keep an eye out on stocks like Apollo Tyres as well. Apollo Tyres, in fact, is at a 52-week high. It will come out with its numbers over the next couple of days. And in that context, after MRF's strong showing, all eyes will be on Apollo Tyres. But for Apollo particularly, there's also the Vredestein business, which is in Europe. And Europe has been struggling a bit. So in that context, it may not, tie in with MRF's numbers entirely. But after the good showing from MRF, all eyes will be on Apollo now.
Okay, Apollo's higher in trade, and so is CEAT. CEAT too reports its numbers tomorrow, and these stocks have surged in trade. Prakash, it was expected to be a good quarter for tyre companies, but are you surprised? And which one? Okay, we've snapped that connection with Prakash. So here's what we'll do. We'll just quickly take stock of the markets, and then we'll invite Jitendra Gohil of Credit Suisse Wealth Management to talk more on the show. In fact, we have Jitendra with us. He's the head of India Equity Research at Credit Suisse Wealth Management. Jitendra, afternoon. Thanks so much for joining in. This is Rima here. How are you feeling about the markets? 6 good days on the trot. The Nifty is very close to its all-time high level. So is the Nifty Bank, just about 2% away. Are you convinced that that there are more legs to this rally now? Or do you think the macro headwinds are getting too strong?
Hi, Rima. Thank you for inviting me on your show. See, first of all, we think that market is a little bit underestimating India's recovery, which is underway. So we feel that India's macro is going to surprise a bit on the upside. If you look at the PMI numbers, which have come really, really strong, and on a relative basis, also look at China, which is just opening up, and the numbers are below 50 right now. So I feel that relative to other markets and relative to our own past fundamentals, I think India has done pretty good. The macro numbers are very strong. If you look at the power sector growth, electricity growth, that is also reasonably very strong. Airline sector is picking up. The tourist or the tourism sector is doing pretty good. So we think that market is going to see some kind of upside in terms of the GDP growth numbers. Now, coming to market, Indian equity valuation was very expensive, but after this sideways movement over almost like 18 months plus, we have seen the valuation has corrected. And after the FPIs have sold off Indian equities for the past several quarters now, their holding of BSE 500 is at a 10-year low. And also, if you look at the near-term triggers, the oil has fallen to below 75 right now. So I feel that, yes, we were expecting that market will see some kind of upside in the near term, given the macro strength, and that view is played out. Now, what next? I feel that in the next 3 to 6 months, we might see some kind of consolidation. Our house view is that we might see a volatile H1, and in the H2, second half, when Fed starts to pause their rate hike cycle, and also the global growth slows down and commodity price starts to correct, I feel that India will see a nice recovery in the second half. So our view has been that use this volatility, use this correction as a buying opportunity with a recovery potential in the second half, and that view remains as of now.
Okay, so basically, Jitendra, you're saying the 3 months now from here, the market stays flat, and then after that, July onwards, you start to see more upsides. That's broadly the view?
So it's very difficult to exactly time it. And,
yeah, no, I get that. Not, of course, pinning you down to specific dates or months. Yeah.
So I think that, why our view is that second half recovery. Let's focus on that. I think, what we need first is the Fed should pause. Our view is a little bit hawkish on the Fed. We think that Fed will raise rates by 25 basis points and then pause for longer compared to what market is expecting. Market is currently expecting that Fed will start to cut rates in the second half. So initial part of the second half, I feel that market may get some disappointments from the global macro perspective. And hence we think that we might get better opportunities to buy. And hence whenever there is a large correction, we think that that is a good buying opportunity. And why second half recovery? We think that in the second half, the global growth slowdown worries will play out. We think that that might lead to some downward pressure in commodity prices. And once Fed starts to stop their rate hiking cycle and become little bit dovish or starts to look little bit dovish, I think RBI will have headroom to cut rates. And that might lead to a kind of a nice support for India's valuation as well as earnings. So we think that right now the global macro especially is extremely challenging, and hence we are neutral on equity with a view that one should buy on this dip at least till June, July. We might see some clarity emerging from the Fed side.
Jitendra, hi, afternoon. So just want to get your sense on earnings. Since you are optimistic on the market in the second half, what is your read-through of the season as of now? And where do you see sort of potential for perhaps more positive surprises as we head down the year?
Hey, hi, Subhi. So from earnings perspective, what we have seen in the past that the sell side consensus has been always a little bit more optimistic at the beginning of the year, and then we see some kind of correction. So from earnings side, we are 3 to 4% below the market. So we think that there could be some small correction in earnings projection, but that's not very sharp. I feel that while the revenue growth might see some kind of downside, but margin surprise, as we have already seen in tire companies, I just saw your report on that. We think that this correction in commodity prices might support margins, and that might offset the weakness in revenues. So we are very convinced that earning growth will be led by banks and also some of the consumption companies which are commodity consumers. So we are not very much negative in terms of the downward surprise in the earnings perspective. We think there could be some correction, but it won't be that material to be so much worried. The only challenge I feel could be from the weather side. I feel that it's still very early to talk about weather conditions, but we have to continuously monitor the situation. If it starts to hurt inflation and the agriculture output, and then probably there could be some negative surprise on the earnings side. Otherwise, I'm a little bit more convinced that we won't see a major downside in earnings.
All right. Hi, Jitendra. Jitendra, what about the cement pack? I think you all were reasonably optimistic out there, but now you believe it's time to take money off the table?
Hi, Nigel. Yes, I think we have seen a very sharp rally, and cement has been extremely overweight in our portfolios. Probably one of our top holdings over the past few quarters. We feel that as we enter monsoon season, there could be some slowdown in demand. It's a seasonal factor, and we think that the pricing growth hasn't been that sharp. I think volumes have been surprising on the upside. So I think from here onward, if cement company starts to do well, it will be a sell-on rally. So we have trimmed down exposure to cement companies, and as we move forward, and if we see more strength in cement, we will use that as a selling opportunity.
Jitendra, we'll leave it there. Thank you very much for joining in. Get into a break. On the other side, we'll get you a few BTST calls. Videsh will be back with us.
Welcome back. Well, just keep an eye out on a few stocks. BEML's land assets. You know, the stock listed just a month or so ago, or less than that actually. And it listed closer to around 270 rupees. The expectation for some was that it listed 350 to 400 rupees. And the reason that I'm saying that keep an eye on it, because it comes out of T2T from tomorrow itself. So, you know, now currently it's in T2T. It comes out of that. Sometimes we do see a bit of a move out there. Stock is corrected to around 200 rupees odd. So keep an eye out on that stock from tomorrow onwards. Well, let's focus on the MSCI index review. The announcement is due on May 11th, post-market hours. But what are the expectations? Vivek joins in today to tell us that itself. Vivek, tell us, what are the expectations with regard to this rejig?
Well, thanks so much. You know, it's going to be a very important rejig this time around. The index announcement, as you mentioned, is a post-market hours on May 11th. So May 12th is when you'll actually see, you know, the announcements come in as far as our own markets are concerned. Now, as per IIFL Alternative Research, you know, these are the stocks you need to keep an eye out for. First on our list, Hindustan Aeronautics. The stock has seen a stellar rally, and that may qualify this particular stock for an entry into the MSCI Standard Index. Flows of a little over $180 million is expected here. The other one is PFC, that is Power Finance Corporation, around $136 million worth of inflows seen here. And also Max Healthcare, you know, that is also likely to make its entrance, and it could see flows of over $280 million, so significant number coming in there. On the other hand, a stock that is likely to be excluded from this particular MSCI Standard Index could be Industar, with outflows of over $75 million. Now, some of the other stocks that will remain in focus, and key among them, of course, will be Kotak Mahindra Bank. After the updated shareholding pattern, you know, the stock will see its weight increase in the MSCI, and you'll actually expect to see flows of over $740 million in a single shot in this particular rejig itself. Some of the other stocks where you could see weight increase is Indigo as well as Zomato. And another set of stocks to keep an eye out for would be the Adani group of stocks. In the last index announcement, there was weight decreases that came in. This time around, you know, there could be a few stocks where you could see further weight decreases that could come in.
Thank you very much for that. That's going to be critical to track. 11th of May is the date when we will officially hear. CEAT, by the way, now has an 8.5% up move, the rub-off impact of MRF strong numbers. Laurus Laboratories has continuously been moving up after the stock tanked on the day of the numbers. But after that, post the management commentary, Laurus Laboratories has been inching higher. 278 was the recent low on the day of numbers, and since then the stock has gained close to about 42 rupees, so an up move there. And India Mart too clocked in steady set of numbers, and over the last 2 days the stock has climbed higher. Mitesh is here with us. He's going to give us a few buy today, sell tomorrow trading ideas, or perhaps even reverse trading ideas. Mitesh.
In fact, I have one BTST and one STBT. BEL is showing clear signs of continuation, so BTST here with a stop below 105. Target of 108.5, 109 can be looked at for tomorrow. And on the STBT side is Bharat Forge. Stock gap down and then it's closing near the day's low. And the intraday charts are slightly on the negative side. So STBT here, keep a stop just about levels of 789 or 790 and look at a target of around 772.
All right, got that, Mitesh. Thanks very much for the trading ideas there. Now let's turn the spotlight on our special segment, the Earnings Corner, and in the segment we're going to tell you all about the key earnings that we'll be tracking for the rest of the week. Now, to name a few, for today all eyes are going to be on ABB as well as Titan. Tomorrow we have auto names like Hero Moto and TVS reporting numbers. We'll also have the likes of Dabur and HDFC coming out with numbers. Friday, we'll be looking at Marico from the FMCG space. So several important companies lined up for the remainder of this week. All right, and since we're talking earnings, let's get to the previews as well. Abhishek is here with the key expectations from HDFC. Abhishek, take it away.
Well, the biggest housing finance lender is expected to report its earnings tomorrow. The key things to watch is that the dispersal in individual segment will be really on the stronger side, both YOY and quarter-on-quarter. AUM growth as per Kotak Securities is estimated at 11% YOY and about 3.7% sequentially. So largely Kotak Securities is saying that the non-individual portfolio that can impact the AUM growth to be on the lower side. Kotak Securities estimates a net interest margin decline of 20 basis point YOY and about 11 basis points sequentially. This can be attributed to the fact that cost of funds are rising for all the NBFCs. So provisions to decline on a YOY and quarter-on-quarter basis because the asset quality will remain under control or improve on a sequential basis. So our polls suggest NII growth of 9.5% YOY and more than 4% sequentially. We are working with a profit growth of 3.4% YOY and about 3.7% sequentially. So sequentially, that is quarter-on-quarter, you can expect good results from SDFC Limited. Back to you.
Thank you very much for that. Now let's find out what Dabur is likely to report. Mangalam is here with the details. Mangalam.
Well, it's a soft quarter that Dabur is likely to report, and that's not us saying it or the analysts expecting. It's the company is saying it in their fourth quarter update itself, where they expect the consolidated revenue to grow in mid-single digits, but at the same time, the India business will report mid-single digit growth with flattish sort of volumes, and the operating margins for the company this time around would compress by about 200 to 250 basis points. Revenue for the company grows at 6%. You're looking at a number of closer to 2,700 crores. The EBITDA, however, declines by 6%. That means margins come in at 16% versus 18%. And the net profit, of course, optically looks like a growth of 19%. That's because the base quarter had an exceptional one-off expense of 85 odd crores. The domestic volume seen flattish. Anywhere between -1% to +2% is the range that most on the street are working with. Important to track, the new product performance of the company, the rural demand, distribution expansion, and a large part of the revenue bump will also come in on account of Badshah Masala's acquisition. So how that scales up is something we'll be watching out for.
All right, Mangalam, thanks very much for that. So that's Dabur for you. And last quarter numbers actually were also a market mover, stock mover in that sense. Let's see what they report this time around. Mayuresh Joshi is head equity research at William O'Neill. He's joining us now to take some questions. There's 19 minutes to go for close. Mayuresh, good to have you with us here. Thank you very much for your time. The numbers are coming through and they're coming in very strong. I mean, at least from names like MRF, etc., we just reported. The revenues are largely in line, this 10% growth, but gross margins, EBITDA margins are through the roof. But it's also kind of a very cyclical kind of a business in that sense, right? From a margin point of view. Some 500 basis point improvement quarter on quarter. Will it hold, not hold? I don't think anyone knows, not even the management knows. We'll ask them if they do join us. What's your sense? What's the way to approach these stocks? Not just MRF, but C8, JK Tyres and others.
Afternoon, Prashant. No, you're absolutely right. And I think the input cost deflation which has taken place has clearly abated EBITDA margins quite significantly. So if you look at a large component of the input costs, natural rubber prices have come off, and the expectation largely is that it should hold somewhere around that 155, 160 rupee kg kind of range. Similar views in terms of carbon black, synthetic rubber, and therefore I think the input cost deflation has propped up margins for MRF and should prop up margins for most tire companies in general. In terms of the demand itself, I think the expectations both in terms of OEM demand expected to carry on in the next few quarters and the replacement markets holding up. I think that is the key in terms of the incremental volume growth that one really expects for tire companies to come through in FY24. If that probably happens to the extent of which the analysts are probably envisaging, you're probably expected to see huge operating leverage play out in their balance sheets. And therefore, I think tire companies probably stay in a sweet spot. Take a case in point in terms of the comparison check that we were doing at O'Neill. And if you probably look at Apollo Tyres, it's clearly come off and then breaking out above its key pivot levels. EPS rating a little bit on the lower side, but the expectation largely is that the TBR market, where it has a 31% share, the PV market, where it has a 21% share, input cost deflation to play out significantly here as well. But a large part of the expectation is that significant margin expansion over the next couple of years, maybe even 14.5 or 15%. And you stack that up with competitors like Balkrishna, which is expected to do well as well, subject to what the global conditions are. But it's definitely better than something like a JK Tyre at this point of time. And therefore, I think pushing through on its European operations very clearly, where it expects to gain around 10 to 12 million in terms of Russian tires not coming through. Apollo Tyres can also gain significantly in that part of the market where it has a 32% revenue contribution. Debt equity not to at 0.59. So yeah, tire spots in a sweet spot. Even Apollo, if they deliver on numbers, can continue doing.
By the way, MRF also has a 169 rupee dividend. That's what they've announced
That
for
could be a
this
huge
year.
contributor
Yeah,
as
so
well.
169 rupees is the dividend announced by MRF. Something a lot of people watch out for and look out for.
Absolutely,
Yeah.
absolutely, and would have a role to play in the excitement that surrounds the stock for sure. Interglobe Aviation, by the way, is still up about 4.5%. Mayuresh, hi, good afternoon. Surabhi here. Now, I don't know, aviation is a tough business to be in, right? We all know that. I'm just wondering what you've made of this whole situation and whether Interglobe at all makes the cut for you from an investment standpoint. I was looking at a longer term chart. I mean, if you trade the rallies, right, you make money in a stock like Interglobe. Otherwise, largely 2-3 years, we're talking about a 500 rupee sort of a band in which it keeps wavering. Your thoughts and whether you'd buy the stock or recommend the stock?
Oh, absolutely, Surabhi. I absolutely agree with you 100% on that. I think they become clear momentum cyclical plays when times are good for them. And at this juncture, what really happens in terms of the admittance to NCLT as far as the go-ahead management is concerned is going to be extremely critical. What you're also seeing in terms of the existing players in the market, obviously you've got Vistara in terms of a domestic airline along with Air India. SpiceJet has got a minimal kind of an operations at this point of time. But it's largely the resolution in terms of a fast mechanism that will probably determine the fortunes for this industry as a whole. Having said that, I think with the kind of development that's probably happened in terms of news flow, Indigo obviously benefits quite significantly because Go has a 8% kind of a market share, and obvious beneficiaries become Indigo and Air India in terms of lapping up that market share gain as well. The second element also in terms of crude prices coming off, which basically mean that ATF prices come off quite significantly, aiding operating margins in terms of the overall efficiencies that airline companies probably run on. The third and the most important aspect, what does the government probably do if Go Air probably fails or is not able to deliver in terms of a resolution check over the next few weeks with the cancellations coming through and ticket prices going through the roof? Is there a cap that is probably coming on ticket prices? So as you rightly pointed out, I think a lot of ifs and buts for the industry as a whole over a longer period of time. I think they've not turned out to be companies where ROI has become consistent over longer time periods. And therefore, they become cyclical plays. On our own lens itself, I think it's crossed that key pivot level. So absolutely, I think the news flow in favor of Indigo, and it becomes a clear play, momentum cyclical play at this point.
Are you hearing, Mayuresh, this cap on airfares, or is just a risk? Because you're the second person telling us to watch out for this today.
So that might be an upside. That might be an upside risk question.
So, okay. It's a risk, but I think we had Ajay in the morning was talking to us about this, saying that there could be a cap, and he was talking about how this is an election year and fares are through the roof, and it's all true. But there's going to be, if something like that were to happen, it's of course, markets won't like it one bit. No doubt about it. We'll take a very quick break here. More on markets on the other side. There's 13 minutes to go for market closing. Stay tuned. More coming up.
Man and machine fight. Who wins? My bet, Chacha Chaudhary, because
Chacha Chaudhary ka dimag computer se bhi tez chalta hai. Yes, we've all read that in magazines, but we're in the age of AI.
Well, does Chacha Chaudhary keep up with that or not is a big question, but our company is keeping up with it or not, because every tech company's boardroom, that's the big discussion that takes place. Artificial intelligence.
And the big disruption it can bring about to jobs and a lot more.
Google, Meta, Microsoft, all of them betting big bucks on AI.
Is AI a transformative technology or a threat to privacy and humanity? That is going to be our focus on Mad About Markets.
Stay tuned. The season premiere soon.
Okay, welcome back. The market's still down about 50, 60 points. Market breadth is also almost 1:1. You just go down the list with the stocks which are up with volumes, and it's absolutely tremendous once again, like yesterday. And by the way, the advanced decline may be 1:1, but the number of stocks which are up on volumes, I mean, that is far longer as compared to stocks on the downside. It's a shorter list. I mean, large volume-led losers as compared to large volume-led gainers once again. Mayuresh, I know you guys at William O'Neill do a lot of sort of quant and technical stuff as well. It's not possible to track everything because it's throwing up all kinds of names, bunch of stocks which move and then kind of something else comes on. But if you want to sort of trades or maybe take positions in some of these cash stocks, how do you do it? You just simply track momentum, maybe, rate of change over, say, 3 months, 6 months or something. Broadly look at stocks which are stronger within that group, stuff which is not broken, 20-day, 50-day moving averages, and then sort of narrow down on names which you want to trade. Unless, of course, it's very bottom up and you really want to buy something for a specific reason, results related or fundamentals. Go on.
Oh, absolutely. I mean, apart from that, I think we've got a specific filters, Prashant, and we work entirely on our canceling methodology, where data sets are actually fed in, where we look at the earnings profile, which are automatically fed into the system. And the filtered lists come through our screeners as well. So I think it becomes a lot more easier in terms of shortlisting of candidates within individual sectors as well. Within the industry classification, as you pointed out, I think our group ranks itself and our sector rotation graphs on Panare, which is our institutional software, throws out which leading groups are probably expected to perform better in terms of the earnings pedigree and which leadership stocks are expected to come through. And therefore, I think this entire methodology works wonderfully well across market cycles. In this cycle, our own sense is that capital goods should continue doing a good show. Selective pockets within BFSI should continue doing exceedingly well. And some elements in terms of the broader markets, including power utilities and a few PSU entities, should continue delivering in terms of our core competencies.
Okay, all right. Mayuresh, I wanted to ask you about BEML land assets. I'm not sure whether you're tracking that or not. It recently listed. And, post-listing, it's fallen, I think, close to 35-40%. But the point is, tomorrow it comes out of T2T. So from a 5% circuit band, it will go to around a 20% circuit band. Any view on these assets? Because, some notes were indicating that it's worth much more, but the street, at least till now, didn't think so. Your view on it?
Afternoon, Nigel. No, absolutely. I think if you probably look at the composition in terms of their asset diversification, and you probably look at the expectations in terms of how these assets might be valued over the next couple of years, I think the expectations in terms of both an accounting norm at this point of time and expecting the standalone performance continuing well, I think core asset valuation itself should be relatively higher. With the margin bands that are definitely changing, I think you should see a lot more action happening onto that stock. And even the core operations, as I just pointed out, I think the government capex, which is improving every passing quarter as we speak. Next year is general elections around this same time. I think the accelerated capex, which will come through over the next 2 to 3 quarters, is definitely going to push through orders for a lot of PSU entities, BML included in that. And in fact, on the asset value, which is far higher, as I said, even the standalone operations should continue delivering well, along with very, very strong performance as far as the dividends are concerned. So yeah, I think there is definitely a potential upside once the margin band changes.
Mayuresh, any thoughts on Havells? Not a bad set of numbers. The street was anticipating that the weakness in the environment may slow down their revenues. Consensus was baking in an 8% top-line growth. The company's delivered close to 10%. Any thoughts on Havells? And considering the valuations are 40-45 times forward multiple, how do you like Havells? And is there any read-through from Havells numbers for the rest of the sector?
So large afternoon, Rima. So I think a large element in terms of their switchgear business actually doing well. I was just going through that press release. Has been a relatively robust and a resilience performance as far as that segment of Havells is concerned. The Lloyd's part of the business is more or less on a flattish note at this point of time. Management does expect it to start delivering at some point in the second half of this financial year. The electrical segment was always expected to be a little bit weak. The previous quarters hit in terms of input cost inflation, specifically copper prices. But I think they're increasing their dealer network significantly over the past few years. The non-South component has started going up as well. And therefore, I think the overall numbers seem to be reasonable. However, the management sounds a tad bit cautious in terms of their press release, in terms of the durable volume growth going forward as well. And therefore, I think the con call is going to be extremely critical on how Q1 probably plays out and pans out, and how the second half probably gets delivered. On the O'Neill lens, below pivot levels at this point of time, and therefore we closely watch out for management commentaries and some price strength in the stock will probably come.
All right, got that, Mayuresh. Let's say, beginning to wind down the day, one trend that's stood out right from the morning is that consumer stocks have had a fairly decent run. Lever, for instance, is ending things on a high note, 1.5% up. Asian Paints, ITC, Britannia, quite a few of these stocks on the green side of the screen. Mayuresh, of course, we'll know more details on Titan's numbers in a bit from now. But leave us with your top consumer pick.
So global focus list will be Nestle is something that we've just recently added on our global list. Numbers have been pretty robust at this point of time. Milk inflation obviously remains a concern, specifically on the chocolates and the confectionery business. But I think I was reading through a lot of management notes in terms of a lot of South-based milk producing companies. And their expectation is post-June, July, I think prices should start cooling off quite significantly, which means second quarter onwards, even this element of the market risk factor on milk inflation should start cooling off, which should support margins going forward. Volume growth has been very, very robust, and the expectations in terms of strong cash flows would continue in strong ROE delivery as well. So top pick from this space till now, as numbers have been announced, seems to be Nestle in our case.
All right, Mayuresh, thanks very much. Good speaking with you. And thank you very much for joining us, as always, here on Closing Bell. Thank you. We'll end 60 points lower, a quiet close, not down by any large degree. So, it's a small one, 1/3% lower on the Nifty. The Bank Nifty, I think, also ends actually even flatter, 0.12% lower. 43,300 or so on the Nifty Bank, so about 100 points away from that support level that we were talking about earlier. Mid-cap index, 1/4% higher, and I think we've got the small-cap index, which also ends. It actually ends unchanged, off the highs, of course, but not very much at all for the day.